Good afternoon, everyone. Again, this presentation is being recorded. My name is Brian Seymour. I'm the program manager for the Made in Baltimore program. We are a program of the Baltimore Development Corporation, which is our city's leading economic development agency. The work of Made in Baltimore is aimed at supporting and promoting makers and manufacturers here in Baltimore City and helping to grow the buy local movement in the Baltimore region. We offer business development services, resources to small batch manufacturers, makers, and retailers. We do this through programs like this workshop series here, Tools of the Trade. Today, we are joined by a plethora of amazing guests, including Vadim from Paperstack, as well as Maria, Alejandro, and Ronal from LEDC to discuss how to acquire capital for inventory purchases. We ask that you please remain muted through this presentation. We would love to see all of your faces. If you're comfortable, this is a safe learning space, so there's no such thing as a bad question. When you have a question, please quietly add it to the chat and it will be answered during scheduled Q&A segments. Do not feel pressured to keep up with note taking. Again, this workshop is being recorded and will be posted on our website at a later day. Thank you to our parent agency, Baltimore Development Corporation. Thank you to you all. And with that, I will be handing things off to our friends at Paperstack to let you know about what they have been up to and what they might be able to do for you. So Vadim, it's all yours.
Hi, Brian. Thank you so much. And it's very, very nice to meet all of you. This is an incredible opportunity to jump on and share some perspective on accessing capital as it pertains to online merchants, small business owners. You'll have to forgive me for a little bit of grogginess in my voice. I caught cold a few days ago, so if it does sound a little off, just bear with me. But I'm really excited to be here. Before I jump into the presentation, just a few words about myself and the startup. So my name is Vadim Lidich, originally an immigrant from Ukraine. Really worked in finance for about a period of 10 years. Started a company called Paperstack last year. We went through Google Accelerator virtually and then participated in Techstars out of Baltimore, right across from Penn Station. And that was one of the highlights of 2021 and 2022 for me and my team. What we do at Paperstack is that we provide working capital, community, and coaching for e-commerce merchants to help them purchase inventory, invest in advertising, and hire talent, specifically focusing on women and minority-owned businesses, advancing access to capital for minority owners. With that said, I'm going to share my screen. I know we're limited by 10 minutes that I have, so I want to dive right into the meat and potatoes of how to get access to capital. And the first consideration, the first question really comes down to choosing between debt and equity. The difference between the two is that equity, for many of you, would be essentially raising capital from venture capitalists and angel investors. And you don't need to repay that capital, but what you could do is you can sell a portion of your business to an individual or a VC for them to invest in your company. And then you'll be able to use that capital to purchase inventory, invest in your equipment, etc. For the purpose of this presentation, I'm not going to focus too much on equity, but just so you know, there is an option for each and every one of you to put forward the traction, the team, the ambition, the unique product, and raise capital from investors. In fact, a lot of e-commerce merchants these days tend to raise money from organizations like Shark Tank or go to an accelerator for CPG type product, as well as just approach an individual investor to put money into the company. But when it comes to debt financing, the most traditional way of raising capital is bank loan. You go to the bank, you book an appointment, you sit down with the loan clerk, you put in front financial projections and a little bit of information about your business, your team, your traction, your sales, previous year's tax returns, and that should essentially be enough for you to get money from a bank. Now, the downside of getting or going the bank financing route is that it's not always very intuitive, and it's not very quick when it comes to securing financing. I know founders that may have spent weeks, if not months, negotiating the terms with the bank, trying to get a few $100,000 in for them to prepare for the busy holiday season. And that's the only downside of the bank. The upside is that bank financing traditionally has been low cost. You're looking at a very low interest rate, if you can secure a bank financing. The second way for founders to access debt financing is through venture debt. Now, once you raise some equity capital, say from an angel investor, or from an accelerator, from a VC firm, you can top that up with an additional debt based on the amount of equity capital that you have raised. The industry standard term is usually anywhere from 25 to 33% of your equity. So if you go ahead and raise $1 million in equity capital from investors, you may be able to go to a company like Silicon Valley Bank, or some venture debt providers, and get $300,000 on top of that million to again purchase inventory or expand it in any way possible. What's been really interesting lately is the rise of alternative sources of financing. So as you think about your venture debt and your bank financing and your equity, these have been really just the traditional means for founders to get access to capital for for decades now. But when it comes to invoice factoring and a few other options that I'm going to mention later in this presentation, these are more unique, more novel approaches specifically for e-commerce merchants to get access to capital, not in the matter of months and weeks, but in the matter of days or hours. And the first up on the list is invoice factoring. Now, invoice factoring is a process where you get a third party to pay for a purchase or to pay off your invoice. Here's a really good example. You approach a supplier to purchase $100,000 worth of your product, whether that's home improvement, furniture, or jewelry, or any inventory for that matter. There's usually an invoice that comes with it. And instead of you paying cash with your own money, there are organizations, and you can Google them right now, that are involved in what we refer to as invoice factoring. By engaging in invoice factoring, you can get them to pay for that invoice, get the goods, and then pay the third party over a period of time. And by the period of time, I mean, it could be anywhere from 30 days to 90 days to a little bit more extended term, but at least you're not constrained by the amount of immediate capital you have in your bank. Now, the downsides, or I would say the considerations of engaging in invoice factoring, it may get a little bit more expensive. Usually, it would cost anywhere from 1 to 3% per month to access funding for your invoice. And so that's something you should just think about. If your balance is outstanding for 3 months, you can very quickly see how that becomes 4 to 6% of the amount that you're trying to access. And the other thing is that you have to have a track record. So like newer companies, newer e-commerce merchants that have been maybe around for a year or less won't probably be able to access the invoice financing, simply because there's not enough trade history or a track record to engage in that sort of activity. But somebody that's been around for a year and a half, or 2 years might be able to do that more successfully. So that's invoice factoring for you. The other thing that I want to bring up as an option for e-commerce merchants, especially when it comes to securing funds in a shorter time horizon, is again a very novel way of accessing funding called revenue-based financing. Now, revenue-based financing is essentially a working capital loan that a third party can provide you, not based on the invoice or profits or equity like in the previous examples, but as a percentage of your sales. Let's take an example, right? Say your company is making $50,000 in revenue a month. It could be $10,000. It doesn't have to be a big amount. And you're looking to access maybe 1 or 2 months worth of revenues in the capacity of a loan. So the revenue-based companies out there, including Paperstack, the company that I represent, allow you to access capital, not based on the collateral or personal guarantee or any sort of bank relationships, but purely based on your historical sales. If you made anywhere from $10,000 to $100,000 per month in revenue in the past, let's call it 4 to 6 months, there is a high chance that you'll be able to secure anywhere from $15,000 to $30,000 in revenue-based financing. And the way that works is very simple. As your business continues to make sales, you will be paying off a small portion of that loan from your sales. If your sales stop or decline, you'll be paying off less. And if your sales increase and your business is doing much better, you'll be paying a little bit more, up until the point where the entire amount has been fully repaid. Again, I'm happy to jump in and tell you more after this session. And the last thing is the supplier financing. Now, many of you are probably dealing with third-party suppliers. You're purchasing furniture, you're purchasing, jewelry supplies, you're purchasing, leather for shoes or cotton for, for shirts. And many of those suppliers also provide financing. What they do is they defer payment terms, and all you have to do is ask. And sometimes it does take a little bit of a track record, but all you have to do is ask and say, look, if I'm purchasing $50,000 worth of leather or cotton or mold or wax or any sort of that, would you be open to defer the payment terms? Can I pay you in 30 days? Can I pay you in 60 days? Can I pay you after I start selling some of that stuff so that I start having revenues and I can pay you back for the supplies that you just sold me? And that's what supplier financing is. The bigger the company that you purchase from, the bigger is the likelihood that they'll be offering supplier financing. So definitely ask for that option when purchasing large amounts of inventory. So I hope that kind of wraps up the presentation on different options, ranging from bank loan to venture debt to revenue-based financing to invoice factoring and to supplier finance. If you do have questions or want to engage with me after this presentation, I'm leaving my website and the email address here for you. Take a screenshot, and I'm happy to connect with you on LinkedIn or other social medias that you use. Thank you so much, Brian. I appreciate you having me.
Oh, no, listen, thank you. Thank you. I know I told y'all that y'all don't have to worry about writing things down, but I was scribbling myself. So thank you so much for being Paperstack sounds like a spectacular resource that I hope that those in attendance today can really tap into and hopefully use to help in their own scaling journey. And with that, I will be handing over the reins to Maria from LEDC, so that way they can walk us through the amazing suite of services and products that they currently have to offer for businesses like yours here in Baltimore City. So with that, Maria, you are now host. And
thank you so much.
Thank you.
Can everybody see my screen? Yes. Well, thank you so much and welcome everybody. Thanks, Brian, for the opportunity to share information about our organization with the attendants today. Just a little bit briefly about LEDC and who we are. LEDC was formed in 1991. We're a nonprofit organization funded by many local funders, private and county-wise, city-wise, and we are happy to serve our communities. Our mission is to drive economic and social advancement to low to moderate income Latinos and other underserved populations. And through the years, although our headquarters are in Washington, D.C., we've grown. So this is all of our locations. We are here in Baltimore at the 3500 Boston Street office. As far as our services go, we have an array of services that we have for our entrepreneurs, and those include small business loans, which the rates and terms up here have changed recently a little bit. It is lower now. It's a 6.5% rate, and we do go up to $250,000. And joining me today is Alejandro Arizaga, who is our senior lender here in Baltimore, and Ronal Castillo, who just joined our team. And they'll be part of the presentation and talking to you a little bit more about our commercial loans. But in the services that we do offer, we are kind of a comprehensive package. We like to help the entrepreneurs from the very beginning of their process. We do business advice, we do the loans, and we also provide continual workshops and training sessions. I am a small business coach here in the Baltimore office. So I help our entrepreneurs, again, from the very beginning, whether it's, hey, I have an idea, this is what I want to do, to, what business should we use? We help them evaluate the idea. We help them register the business once they've decided that this is what I want to do. We assist with putting together a business plan, which a lot of folks not too comfortable doing, but it is a vital part of knowing and managing your business accurately, and certainly helping you with the financing, because most lenders would want to see that you've given that process some thought. So we help you with putting that together. And we also have an entirely different side of our business, which is housing, but we won't go into that today because we primarily wanted to talk about small businesses. So having said that, we are a little bit more traditional in the scope of our lending, but we are slightly different because we are a CDFI. So that means to you as a borrower that we have a lot more flexibility than a traditional lender would. And so as a business coach in the office, and I will have a counterpart, we work hand in hand with the lenders to facilitate, to walk you through the process of this is what you need in order to get your loan done. We work through your numbers, we help you do budgeting, and we help you go through those business planning. So having said that, I'm going to let one of our lenders talk to you about the different types of loans that we do, and what the criteria is to get those going.
Hello.
Alejandro, Ronald. Okay.
My name is Ronal Castillo, and I work for LEDC. I am law office for the branch of Baltimore. LEDC is a financial institution. We help to the small business, and in different moments, if they starting the business, if they need growth, LEDC bring financial option. If the business have problem to access to the banks, maybe, or we are right to be the better option for them. What we offer? We offer no hidden fees. We bring all the information at the moment, the writing information. We bring advice for the business. Our application is very easy to process. We bring loan between 1,000 and 250,000. And then the interest rate start at 6.5%. If you want apply the loans, you can see in the slide our website, and you send the information. Then we receive the information and send to the loan officer, and we bring the information for every situation. Maybe you can see the slide. It's a little small, but every loan needs requirements. For example, we need to get the bank statement, we need to get the tax return, and you have to fill the application. The terms between 6 months to 10 years. My coworker, we continue with the information.
Good morning. As Maria and Ronald already mentioned, I'm the senior loan officer and underwriter for the Baltimore office. As my colleague Ronald mentioned it before, our loans start at 1,000 and they can go up to 250,000. We are similar but not the same to a traditional lender. We're not a bank. We are basically the step before banking. We prepare our businesses for better rates. Our interests, like Ronald mentioned, are at 6.5%. Then they can go up to 12%. However, I've never seen a business lending at 12%. Most of our lending ranges between 8.5 and 7.5%. Some of the requirements that we ask from our clients are business taxes, our bank accounts. We also have a small fee of $50 to start the application. We also have a 3% fee once the application has been approved of whatever loan amount. Some of the options that we offer for lending are inventory. However, we also focus on equipment purchasing, business acquisition, anything business related will be that we can cover. We're more than welcome to take a look at and perhaps process the application. The turnaround time for some of our lending, it's between 2 weeks and a month. It all depends when the documents are ready for us to process your loan. If you guys would like some of the information, or if you want to learn more about the lending side of the organization, I'll be more than happy to connect. Our information will be presented to you at the end of the presentation. And with that being said, Maria, I'm gonna hand it back to you.
Okay, did you guys want to go over through the credit, the 4 C's of credit?
Oh, sure. So yeah, I forgot. We actually some of the lending process that we analyze. It's the we call it 4 C's, and it's basically analyzing if the business is able to make the payments. So we want some of the revenue being presented to us or some of the business operations to be capable of paying the whatever loan amount they're seeking. Also, we focus on the character and the credit knowledge, experience of the owner. So we don't have a minimum credit score per se, but we do look into the history of your credit. So we don't want anything very recent as of any bankruptcies or any recent delinquencies. That actually throws a red flag to us, right? As long as you're current on your accounts, that will always be a plus when processing a loan with us. We do look into collateral. However, anything below $5,000, we call them unsecured loans, and most of those loans do not require any type of collateral. Anything above 5,000 usually requires between 25 and 50%. Every case is different, so we do take the time and analyze the case, and we try to work. We're pretty lenient, so we try to work with everything and anything that we may have at the moment. Capital. So it all depends on what you're going to be using the funds for. As the presentation mentions, you know, it's an inventory focused presentation. However, our inventory, it's only part of what the services that we offer are involved in this case. Do we have anything else, Maria? Okay.
No,
yeah.
that's all we had. But if you don't mind, since I have an audience, Alejandro did mention credit. We do have some other credit products that are geared towards number one, building credit. If you're starting your business and you have no personal credit, we can help you with that. We have a credit building loan that it's $1,000, up to $1,000, 0% interest. And also we have if you have had some challenges with your credit and you're trying to repair that in order to parlay that into your business venture, we do have one that is up to $2,500. Same thing, kind of piling some maybe some outstanding debt so that it helps you bounce into that next step. That's our resilience loan, up to $2,500, and those are 0% interest as well. The criteria for that is just a couple of months bank statements and some income that you're receiving on a monthly basis. And we are happy to, answer any questions at this point that you may have, and our information is here at the end. We are more than happy to take phone calls if you want to shoot us emails and you have questions. happy to walk you through the process. It's been a pleasure, and thank you so much, Brian, for the opportunity.
No problem. Thank you guys. Yeah, today is a short and sweet one, guys. Again, Vadim said he left his email in the chat. Let me go ahead and pull that up. It is Vadim, VADIM, at paperstack.us. If you have any questions for him as far as the offering suite of Paperstack, Maria, Ronald, and Alejandro, if you guys could, I see you guys have them on the screen. If you could drop your emails in the chat for participants, just so that way everyone can pull it from there. Man, that was great. I know for me, I had no idea that LEDC offered such a huge suite of services, and I'm hoping that that you all were able to find a lot of benefit out of what we've gotten today from our amazing presenters. Looks like everyone's dropping their emails in the chat right now. So thank you again. If you're a small business in the audience right now, drop your email in the chat. If you want to connect with anyone today, take the time to do it now. Okay, thank you so much, Ronald, for the link. So again, if you are looking to hop in with LEDC, please hit that link in the chat. And with that, again, a huge thank you to all of our presenters. This was incredible. This workshop will be available in the coming weeks. And you can head over to madeinbaltimore.org to check out some of our past workshops. Until then, again, thank you to our parent agency, Baltimore Development Corporation. Thank you so much to all of you all for being so amazing during this process. And with that, we're done.